Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about how long the IRS has to be able to go back and audit your tax return. Generally, the statute of limitations is 3 years, but there are certain circumstances in which they can go beyond 3 years. I've got Andrew McMillan here with me today. Andrew, what are some things that would cause the IRS to be able to go further back than 3 years?
So one of the big things is if you underreport your income by more than 25%, the IRS is going to actually have 6 years to look at that tax return. So if you forgot some income, missed something somewhere, like if you're underreporting your income by more than 25%, then the IRS has 6 years to go back and look at that tax return. Another one would be if you have fraud on your return, like if you've done, did a transaction you shouldn't have or deduct something you shouldn't have, like if you're committing fraud on that tax return, the IRS is going to have an indefinite amount of time to look at that tax return. Like the statute of limitations never closes on it. But to say all of that, most audits do happen within 12 to 18 months of filing a return. Like as you mentioned, the IRS generally has 3 years to audit a tax return, and that 3-year clock starts when you file the return or pay or the due date of the return, or when you file it, the later of those two. So it's always good to file timely, continue to file returns, just so that clock starts, never get behind. Because if you never file a return, well then, the clock hasn't started, right, and it could be open forever, until you finally file the return. So those are the reasons why the IRS may have some longer time to look at your return. Another, just to kind of add on to some of this, the employee retention credit's been a pretty popular, a pretty hot button issue here as of recent years. The IRS actually extended the due date to audit a return. Like if you receive the employee retention credit, and you need to file amended returns to kind of report that correctly, to remove deductions that you might have taken previously, the IRS has 5 years to look at those returns. So the biggest takeaway here is just, report all your income, file your tax return, do the best you can to make sure you stay in compliant with all of that.
Awesome. Well, that's really good information, Andrew. If you have any questions, if you're under audit or, you have some concerns about some tax returns that were filed maybe 4 years ago and you want to find out, if you're going to fall in that area of 3 to 6, feel free to give us a call and we can help you with that. Thanks.